तो वो कर ले, मैं 5 मिनट लगेंगे। क्या नाम है?
Shall we start? Okay. So, good evening, everyone. I see Gyati Gupta. Welcome you all on the behalf of committee. I see Gyati Gupta. Welcome you all on the behalf of the Committee on Financial Markets and Investors Protection. The CFMIP provides suggestions on various bills, notifications, circulars, and other documents related to financial markets to the government and regulators. Besides this, the committee regularly interacts with MCA, RBI, SEBI, Insurance Regulatory and Development Authority, Forward Markets Commission, and stock exchanges on the issues relating to financial markets, role of CAs, and investors' protection. So, we today's topic is about financial market breakouts. This is one of the topics that interest many people, be them professionals or students or even common people who are keenly interested in investing in stock markets and want to make best use of their funds. So moving ahead, let me take an honor in inviting one of the most notable and inspiring chartered accountants of our fraternity, who is also chairing the Committee on Financial Markets and Investors Protection. He needs no introduction. The name in itself is a brand. CA Charanjot Singh Nandaji. Sir, over to you. We want to hear your words of wisdom.
Very good evening, Gyati. Thanks a lot for inviting me. The speaker of the day, Mr. Ashish Baheti, Animesh Singh, Nisarg, Mr. Gaver, who's from the Capital Markets Committee, and all who have joined him to go home more enlightened. Ladies and gentlemen, we are back with yet another exciting session on how to create value and worth by investing in stock markets. I want to tell you one thing very candidly. When you understand the markets, you start reaping the benefit. I'm reminded, when you think of stock market, I'm reminded of a couplet which I would like to share with you. The couplet says, देते ना थे जो जवाब उनके सलाम आने लगे, देते ना थे जो जवाब उनके सलाम आने लगे, वक्त बदला तो मेरे नीम के पेड़ पर आम आने लगे. When you know the market, you make heap of money out of it. When you understand the market, you are at mental peace. You understand what your views is. And the best part is that the Council of the Institute of Chartered Accountants of India have now allowed practicing chartered accountants to go ahead and trade in derivatives, future and options related to the currency segment and stock segment, index segment. Ladies and gentlemen, please understand, when you understand the market, when you understand where a stock is going to give a breakout, is the time if you buy, it gives immense returns. And people like Mr. Ashish Baheti, who is a chartered accountant from Pune, has led his entire life inventing those areas. He dreams, thinks, eats. The movie of Amitabh Bachchan, he says, I speak English, I sing English, I eat English. So Mr. Baheti, essentially, Mr. Amitabh is an actor. He may say something based due to certain other considerations. But when Ashish Baheti is concerned, I know he drinks markets, he eats markets, he thinks markets, and therefore he is able to zero upon certain such strategies who would add your knowledge so that you are able to effectively trade in the market and create value and worth. Time is short. He will take a 3-hour session, and I will not stand between you and Mr. Baheti. So over to Mr. Baheti for his words of wisdom. Over to Madam Gyati Gupta to invite Mr. Baheti for his kind words of wisdom. Thank you. Thank you so much.
Thank you so much, sir. So, members, one of the very famous personalities, Robert G. Allen, once asked, can you tell me how many millionaires do you know who have become wealthy by investing in savings account? I rest my case. And so is the reality. You need to find out something other than traditional methods that can compound your worth, and financial market is such a venue. With these words, let me introduce CA Ashish Baheti ji, the speaker of the session. Ashish ji is the director of NAV Investment Banker, Investment Research Private Limited, and Quant Express Technologies Private Limited. He has worked with JP Morgan Bank and JP Capital as an analyst, and he is a portfolio manager. He has worked in Singapore and have traded US, London, and Indian markets. He has total experience of 15 years in capital markets. And coming to his educational qualification, he's a chartered accountant, company secretary, LLB, AFP, NSE certified market professional, and he holds a certificate in Python and data science and financial risk manager L1 from GARP. Adding more to it, he is the guest speaker on CNBC, ICAI, Rotary, IMA, CII, management colleges, and other forums. So we invite C. Ashish Bahiti ji. Over to you, sir. We are looking forward to have many key takeaways from your session today. Over to you, sir.
Good evening, everyone. Thank you, Nanda sir, for giving me the opportunity to be a speaker today. It's really an honor to be here. Thank you, Gayatri ma'am, for this wonderful introduction. Coming back to us today's topic. So I'll be taking a topic on the breakout. So we all know technical analysis is a recent study on stock market. When I say recent study, it is stock market is in India itself is a couple of centuries old, and across the globe, we know that somewhere around in the first stock market scam was around 400 years old. So the stock market itself is internationally, if I'll say, it's another 400 to 500 years old concept per se. But technical analysis has been a recent study which has been taking a lot of momentum in last, I'll say, 30 to 40 years or 50 years. Okay. The technical analysis is as considered as originated in Japan, and it started more, the candlestick what we study started somewhere in rice markets. The traders used to trade by use of technical analysis into the rice markets. But however, into the Western world, it is a recent study compared to the traditional fundamental analysis what we speak. That is more an old age study. So what we do in technical analysis is we study prices, we study the volume, and we study the patterns. There's a common saying that the history repeats itself, and technical analysis is nothing but the study of price patterns and the human psychology. By way of charts, we try to analyze what is the humans, how when a particular price is coming, how the investors, the traders, and the other players are behaving. And we all know that humans have a basic tendency when the prices are going up, there's always a FOMO in the market, and whenever the prices are going down, there's a fear in the market. Okay, so every bull market, the market behaves in the same way. The stock scripts changes, but we have seen somewhere around 2008 there was a bull market, massive. 2007, in fact, before 2008 there was a massive bull market, and there were certain stocks which run up, in one fashion. Again, 2021, when we saw the bull market, after the COVID crash, there was a bull market from the below levels. There was a certain pattern which got exactly repeated like 2007. So in every fall, be it lemon crisis, be it Brexit, the Greece exit, which happened, or Greece default, which was there around 2014-15, or the COVID, or the Russia-Ukraine war, we've seen there's an absolute panic in the market. Every fall or every time when the market falls, there's a common pattern, and that common pattern is, there'll be a massive selling. The selling will be more predominant in the mid cap and small caps. The large caps will fall less. The VIX, or the volatility index, will always increase, and it will increase. During COVID, we have seen VIX, which is the volatility index measure, went as high as 80, which is currently at 12. So you can understand the average VIX is usually in the range of 15 to 20, and during COVID times it went as high as 80. Even during 2008, there was same pattern was there, that the VIX went, or the volatility index went above 40 or 45 that time also. Even during the Russia-Ukraine war, 2000 last year, 22 Feb 24th, when the Russia-Ukraine war started almost. So you'll see the last year March, again the VIX was very high, and it went above 30, 35. So the patterns remain the same. Now we have to understand, how do we use technical analysis for our benefit, and how can we make a right decision, and how can we find stocks by way of technical analysis. So I'll prefer this in session to be a little more interactive. Since we are doing it a digital session, I'll be really I'll really appreciate if you can use a chat box, so we can have a little more interactive session that will help to have a better learning. Share my screen. So is my screen visible now?
Yes, sir. Your screen visible.
Can we have a chat box by the participants? Just some of the, if you can say the screen is visible.
Yes, sir. I'll just check it out.
Participants, I don't think so. They can directly chat. They can chat live. CA Gyati ma'am, she can see. Then she will intimate you.
Okay. Good. I cannot have the access to the chat. I mean.
Yeah. And then you can also chat. I think you can access. I think that I will send you by WhatsApp. You can access the same also in between.
No worries.
Okay.
Yeah. So there's a common saying in technical analysis that in market, all you need is one pattern to make a living. See, technical analysis is a very big study. There are hundreds, not just hundreds, there are thousands of indicators. There are hundreds of patterns, and if you just do the permutation combination, it will be infinite. Say it's a moving average is one of the concept. You can have any parameters of moving average. One can use 5 or 50 or even any fractions of the numbers. So there's an infinite number of patterns available, but you don't need to learn everything. All you need is to just master one pattern, and that is good enough to make a living. Okay. And out of my 15 years of market experience, the one pattern, at least I'll say, which I'm using from last in this 15 years, this consistently I'm using one pattern from last 13 years. That is what I will be discussing today. It's a very common setup, very easy setup, not a common, but a very easy setup. But it is good enough to give you a market glimpse in, you don't have to do hours of study. You don't need to spend, lot of time in chart study. It is a simple study which can tell you about the market direction in a very short duration. Okay. So, this is the chart of Nifty. Okay. As you can see, this is a little old chart. I think a month-old chart, probably. But this is a weekly chart. It's a common line chart, which is what we have all known. So in a line chart, it's only the close price which is considered. So it's a weekly chart that every week closing prices has been taken. And as you can see, there was a fall. This was the COVID low, 2020 low, which happened somewhere around the month of March end and April 1st. And from there, we saw a massive run up till almost September 2021. This was a 2021 September October high. From that time, market has done nothing. Even if you'll see today, this was a little old chart. That time market was 79.44. So till even if you use the recent chart, market has done absolutely nothing from last almost 1.5 years to 18 months. There's absolutely no return market has given. In fact, March 22 to March 23, okay, there's been a return of almost 1% only in Nifty. Okay. So traditionally, what we have learned, understood about market is that market may you have to hold the stock, you have to buy and wait for a longer time to make money. This is the traditional approach of market. But that traditional approach is no more valid. Why I'm saying it is no more valid? Because see, now we are staying or living in a global environment. Everything is so interlinked and connected that any impact on any of the global scenario does easily impact us. A bank failure in Germany can make our market fall. One Silicon Valley bank, which nobody heard, most of the people were not even aware, went bankrupt, and our market started correcting. So it is nowhere current, directly connected to our markets, but yet because of the global interconnections, our market has become more fragile. And gone those days where we can just buy and sit tight. Why I'm saying this? Because in my 15 years of experience, I have seen events which are like once in a lifetime kind of events. When I'm saying once in a lifetime, agar aap theoretically book examples dekhoge, so what is the probability of a 108-year-old bank failure? It is negligible. There's zero probability that a 108-year-old bank like Lehman Brothers can fail. But we have seen the entire US, the probability of entire US economy meltdown or collapse of the bigger banks in US, and that banks like Tata AI, companies like Tata AIG, insurance company like AIG, on the verge of default, and US government coming and bailing them out. So if you theoretically see, the probability of those events is very negligible, but we have seen that. Then we have in somewhere around 2012, 13, 14, we have seen Grexit. Grexit was Greece and Italy and the other PIGS country, which is the Europe countries, defaulting on their bonds. So any country defaulting on the bonds is again one of the rarest events. Then somewhere around 2020, we have seen a pandemic. Most of us were not even aware of that word. We have at max we have heard about epidemic, but pandemic was a very new word for many of us, and nobody even in their wildest dream could ever imagine that entire world coming to an halt. But that happened. Similarly, we were almost on the verge of Third World War last year, when the Russia-Ukraine war happened, and there was almost a threat that there might be a nuclear war. And we have seen a crude commodity like crude going negative. Nobody could even imagine that crude can go ever negative. Oil bhi le lo aur paise bhi le lo. That was the case, where you were getting oil also and you're getting money also to for that oil. So considering all those things, now is not the time that we just go and buy and hold that stocks forever in our portfolio. Why am I saying that? Because considering the market volatility we are living in, even if you say holding a portfolio, each of these events, whatever we discussed, from Lehman to recent Russia-Ukraine war, each of these events can easily spin the portfolio value to half. Each of this event was like where we saw the portfolio value dipping to half almost, or 50% till 50%. And when that sort of things happen, it is very tough to even hold those stocks. We all know in the long run, the stock market will want to go up. In the long run, all the companies will want to do good because we are investing in companies, we are investing in businesses, and businesses will want to do good in the long run. So eventually, if the business is doing good, the share prices will want to do good. But in the short run, because of this extreme volatility, it might hamper our portfolio, and it might, some of the people who might have exited here, may have the biggest regret of their life. Say anybody who's holding portfolio for 5 years and might have exited in this point might have lost all the gains. Okay, and from there it made a massive rally. So it is very tough in these volatile situations to hold the portfolio and to hold it very tightly. So we have to understand that we have to churn the portfolio. We have to periodically book some profits, and how to book profits or how to take entry. That is what we want to learn today. Okay. And again, the traditional way of investing was, I am a third generation into the market. My grandfather was into stock market. My dad was an active trader and investor. My grandfather was active investor. During my grandfather's time, it was very easy. You used to get stocks at fair valuation. There used to be stocks which is coming to the IPO market, stocks like say HUL or other companies which were coming at almost at the fair valuation. And then you just go, fill up those IPO forms, and if you get lucky, you get the shares. And they used to be multi-bagger. So there was not much of the research needs to be done. But now is not that case. Okay. there's a traditional saying that invest in the companies which you know. जिसका business आपको समझता है. Theoretically we say that buy in stocks which you're using the products. This is the product which we all are using in our day-to-day life. Paytm. I'm not talking about any stock specific, but it's just an example. Okay, this is not a buy or sell recommendation, but we are just discussing the cases here. Okay, what happened to this stock? Nobody invested in the IPO could have ever made money here. The IPO came at steep valuations, and all these IPOs, whichever is coming, they are coming at a very, very pricey valuations. There's already a market which is of the PE or the VC circle, which comes pre-IPO, and this is the common scenario now. Any company which is coming to the IPO might have taken some PE round or some VC round or some angel rounds. So they always know that they'll be coming at on a higher valuation, and there's very little left on the table for the investors now. Okay. So gone those days where we can just invest in good companies IPO and we make good money. From there, the Paytm we have all seen, the 2000 rupees share saw almost like 500 rupees ka value. Stocks fell down from 2000 to 500, and in a very short span of time. So then, even if it's somebody's horizon is 10 years, but a drop of 2000 to 500, even if you want to hold this stock for 10 years in your portfolio, but at least for 3 to 5 years, it might not give you any return. Okay, considering the recent prices, it might take somebody who is invested in the IPO might take at least 3 to 5 years to even have a decent FD type of return. So we cannot go and buy the IPO shares and make money. Now, this is another example. You might say that Paytm is this is again another example, which is like a very good example that there was a chip shortage during COVID times and the car sales were going out of the roof. And the beautiful story that again, the second-hand car market is very unorganized market in India. It will going to grow. It is going with a CAGR of 30%, and this company should do good. But what happened? Again, this company which came at somewhere around 1500, went one way fall to almost till 500 rupees. Okay. So again, here also, this is a car trade. The name of the company is Car Trade. Again, here also investors have not made money. Now you might question me, or you might say, sir, these are the startups. They are supposed to be a loss-making company, and since there's no profitability, how can investors make money? Okay, so I'm sure many of you might have thinking in that way. Okay, to answer your query, let's take another example. This is not a startup. Okay, this is again whose product we all have used in our life. We trust totally with this company, not just in our lifetime, but even after our death. This company will fulfill all its commitment, whatever it's made to us. LIC. Again, what happened? And despite the government's best effort to keep it as fair valuation as it could, government has said that we want to keep the valuations very fair in LIC case. But again, here also investors could make a decent amount of money in the recent time. I'm not talking like in 5 year, 10 year, probably in 5 to 10 year period, it might gonna give an absolute good return. It may or may not. We are not questioning that. What we are talking about is what happened in the past. Okay, so we are not predicting future here. What we are trying to say is, even in the past, any investor who have come here, be it a policy holder who got a discount, policy holder, there was some discount, or anyone who was just invested in the HNI category or the other category, retail category, couldn't make any money here out of the IPO gains. So there was no IPO gains. Okay. So we have to evolve ourselves. We all were using landline phones 15 years, 20 years back, but now we don't use. Even if there might be a landline phone in somebody's office, we don't reach or we don't call in their landline phones. We use we use their direct mobile numbers. So we have evolved our communication channels. So we have to evolve our way of investment also. We cannot use the traditional approaches that we go and buy a IPO share and we make money. That is not, that was a traditional approach, that you just invest in good IPOs and you make good money. Or you just buy and buy right, sit tight sort of approach. You just invest in a good company and just forget it, or keep on investing and it will make you good money. That is, that was a good strategy when we were not so interconnected with the global world. Now we are so interconnected with the global world that tomorrow if there's a company in Japan defaults, or a bank in say South Korea defaults, that might have global impact. And even in our Indian markets, which have very no direct correlation on businesses with that particular bank, might feel the heat. Our banks may even fall 2 to 10%, somewhere like that, because of that global event. So now we have to be very proactive with our portfolios, and we have to evolve ourselves to do some technical analysis. Now I understand that most of you are practicing chartered accountants and you have a lot of deadlines to match. There's a huge compliance pressure, and in such a hectic environment, like in a season time, say September, you don't even get time to eat your food. How you will get time to see your portfolio? You'll not have time to analyze the portfolio. So for that, we have to have that quick way how we can quickly analyze the stocks, how we can quickly analyze where the trend is, how the stock strength are. Okay, so because of that, before we go into that, let's have some sort of example. Okay, so this is data of, say, a city. This city have a temperature of which is ranging from 36 degree to I'll say 48 degree. The lowest was almost, I'll say, 20 degree. But by seeing this data, by seeing this temperature of city A, what can you say? What can you analyze? Is this city hot, cold? What can you analyze? Yati ma'am, if you can just let me know in the chat if they have commented anything.
Sure, sir. Just give me a moment.
Nisarji, is there any way I can get access to the chats? Okay. Or
okay. That otherwise, in what through WhatsApp I already given.
Okay. You have given me the link. Okay. Just sir, it is asking for some login.
Yeah, that also you already given.
Okay. Yeah, just give me a second. I'll just open the chat, so it will become a little more interactive.
But sir, as far as I can check, there are just questions posted, but no comments or no.
Okay.
I can also not see any chats.
No worries. Give me a second. For this web, and in this questions. I've logged into this. I can see, I think probably only the questions part.
Questions. So answers are coming. One says it's hot. The city is hot.
Okay. Now I also have that probably access to the reason for failure in the financial allowed to do intraday. Also false. Yeah. So yeah, I can see the temperature is more than 40 degree. Okay. Yeah. So we can see that city have temperature which is relatively hot. Okay. So this, how much is the N or the count is the 15 temperature readings we have on the screen. The mean or the average, what we say is 41 degrees, by which we can say it is easily, it's a hot city. Okay. So can we write here as city A as hot? Okay. So what is the standard deviation? The mean or the standard deviation, this is nothing what we all have probably learned in our P1 or foundation, or it was part of the, or in our school days, presenting in a high, falling, and then rising. Okay. So the average is the standard deviation, the mean is 7 degrees. Okay. So can we easily say that, say if you have to go to the city as a tourist, what sort of clothes you'll be carrying here? Obviously, you'll be carrying hot clothes. Okay. And what is the temperature range can you expect here? Considering for the sake of simplicity, let's say the standard deviation or the sigma is 7 here. Okay. So what is the maximum we can expect here? We can expect a temperature of maximum 48 and minimum of say 34. Okay. So maximum temperature in the city can be, say if I have to travel the city for 1 or 2 days, by seeing this data, I can easily analyze that, though there was 1 day drop of till 20 degree, but that is a sort of an outlier. What we call in a statistics terms, we call it as a kind of an outlier. But the average temperature of the city is 41 degree, and the max it can go is 48, what we have seen, and the minimum what I can expect it to drop to in the range of 34. So considering the standard deviation, we can easily say that this city can have a temperature of min and max of 48 to 34. Yeah. This is the temperature of city B, where we can easily see that temperature is from 26, it went low as probably 18 and high of something 35, and then again a low of 15. Okay. So can we, this city was, we have marked as hot. Can we mark this city as cold? Or relatively a mild temperature, or of mild or temperature, something like that. Yeah. So again, the 15 counts. What is the mean of this? The average of the city is 22 degrees centigrade. So the city has a pleasant weather, I'll say. Okay. And what is the standard deviation or the sigma? For the sake of simplicity, let's say it's a 6. So what is the maximum and the minimum temperature can we expect here? What is the maximum temperature? We can easily expect a maximum temperature of 28 and the minimum temperature, which is of say 16 degree. Yeah. So 20, we can expect a temperature in the range of 28 to 16. Okay. So now we have these two data. Okay. So say this city is kind of a hot city, and say probably at Delhi today would have something like this kind of temperature, or some small city. What if I carry sweaters and all my winter clothes here? I'm carrying sweater and my winter clothes here. What will happen to me? Gati ma'am, you can answer him.
But it will
Make it a little more interactive. So on behalf of everyone, you can answer.
Sure, sir. Sir, it will be an added baggage, and it is not going to serve any purpose, और बहुत ज़्यादा गर्मी ही लगेगी उसको पहनने के.
Exactly. And I'll fall sick probably.
Yeah.
If I'll wear this, say I'm carrying sweaters and I'm wearing it in a temperature like this, I'll fall sick. Okay.
Yeah.
And then can I blame the city? Can I blame the city that city kharab hai?
No,
Whose
no.
mistake is that? I mean, it is my mistake.
Yes.
So
Completely.
So can we say this hot market is like probably a bear market? For the sake of simplicity, can we replace the hot word to as a bear market, where the city getting hot means market is going down? So if I go in a bear market and if I start buying and then my portfolio bleeds, so whom should be blamed? Me or the market?
Me.
Obviously, I should be blamed. In a bear market where everybody's selling, or there's a fear or the panic in the market, but I'm trying to just catch a falling knife. and I'm just trying to be that saying that the market is market यहाँ से rebound हो जाएगा या मेरे खरीदते ही मेरे 2 लाख के investment से Nifty will go up. So it is my mistake. Similarly, this cold, can we say if it's a pleasant weather, I should be carrying more of a jacket or something, a pullover. Okay. And if I don't do that, whose mistake is that? It's my mistake. Okay.
Right,
So
sir.
can we say this cold weather or a pleasant weather as a bull market? So, accordingly, we'll have to plan ourselves accordingly. We, when we are going to a city, we plan our clothes. Accordingly, when we are going to the market, we have to plan our strategies. We have to see how we should be doing, what we should be doing in the markets. Okay. So this is a bell curve, which is if you take a normal distributed data and we plot it, we're always going to get this sort of a bell curve. Okay. So this bell curve is used across industries. It's a statistical tool, and it is used in HR to your all the economics and all the decision making. Okay. So what happens is we have when we plot a data and we see a serious underperformance. Okay. So say this is your company's employees scorecard. Okay. So you have Mr. Kapoor here, who have been seriously underperforming, and Mr. Puri here, okay, who's seriously excellent performer. Now, if you have to give a salary hike, whom will you give a salary hike?
Excellent performer.
Mr. Puri, you're going to give a salary hike? And
No,
whom
sir.
you're going to fire?
Sir, the underperformer one.
Mr. Kapoor, isn't it?
Yes.
But what we do to our, or let's, for the sake of simplicity, let's change the names. Let's have 2 more employees. So we have Mr. Anil here, and we have Mr. Mukesh here as an employee. So whom will you want to give a raise or whom will you want to fire?
Sir, Anil would be fired and Mr. Mukesh would be given a raise.
Yeah, but what we do to our portfolio, we keep on adding yes banks and we keep on exit HDFCs. It's
right.
not that the retail guys have not bought HDFC, but today retail participation in HDFC is very negligible. It's mostly owned by the FIs and the institutions. And if you see the data of Yes Bank, it is mostly owned by the Yes Bank is mostly owned by the retail participants. Not mostly, but the retail participation is much higher in Yes Bank compared to HDFC.
Sir, we buy it in the hope that it will rise one day, it will give returns to us one day.
Yeah, exactly. So that's what we say. We say that Mr. Underperformer has not performed till yet. One day he's going to perform. One day he's going to be, Mr. Anil has not performed yet. And one day he'll perform. And today he's available at a very, Mukesh is charging me a salary of 2 lakh rupees, but Anil is charging only 30,000. So let's hire more Anil because it's coming cheap. It's coming cheap because it is cheap.
Right.
It is not performing. That's why it is coming cheap.
Mm-hmm.
Okay. So, and what we do is we keep on adding Mr. Anil shares, and what we do is we exit Mr. Mukesh share because it has already performed. And we have an assumption that since it has performed, now it will not perform. It is already expensive. So
right.
that is the common mistake which all the retailers do. If you'll see the retail participation of the they'll have more Suzlon in their portfolio, even in terms of value, than these blue chip names. And it's not that the retail guys have not bought blue chips. They were excellent in finding these blue chips, but they have exited too early. They have exited with every one good performance, and they said, now let's find the next blue chip. That doesn't work. Okay. So again, this one particular graph I'll discuss a little later. But when we talk about the data, say when we plot a data, normal distributed data. Okay, so the probability density is the 2 standard deviation. The 2 standard deviation will cover almost 95% of my data set. Okay, when I'll be talking about the detailed discussion on the indicators which I'm using for technical analysis, we'll come back, we'll visit this particular chart. Okay, but for the sake of understanding, so if I have a large sample of data, so my 95% of my data will come between this two standard deviation, which is the zone will cover my 95.4% of my data, and my 3% standard deviation, or let's say my 1 standard deviation, will cover 68.7% of my data. Okay. Some of you might be thinking that this was supposed to be a technical analysis session or a stock market session, but we are discussing more on the HR part or more on the statistical tool. See, market is also based on just the numbers. Okay. And if you use the statistical tools to understand the market, it will give you an unbiased approach. Okay. What happens, we have most of the time, there's a common in market that we have a Stockholm syndrome. That's a common syndrome that where Stockholm syndrome, STOCK syndrome. I'm sorry for my spelling, but what is this? Where say a kidnapper has kidnapped somebody, and the kidnappee has fallen in love, and they have just married. So that is the thing, that we have bought a share and we get so much involved in that we think that share is, we keep on adding, in spite of the fact that share is falling, we keep on adding that share in our portfolio. Okay, so stock market is more like that. It has lot of biasness. People, the investors usually have a lot of biasness into the market. Okay, so now coming back to our technical part. There's one indicator in the market technical analysis, which is known as Bollinger Band. Okay, so Bollinger Band is nothing but just a statistical tool. When we use a statistical tool, it helps us to remove all those biasness, all those preconceived notions what we make on the market. That helps us reduce that. Okay, so and we think more objectively rather than subjectively. Okay. We think more analytically rather than, or our decision making is based on more on the numbers rather than ये लगता है ये हो जाएगा. Our assumptions or hunch के basis पे नहीं, we take decisions more on the basis of the numbers. Okay. So what is Bollinger Band? Bollinger Band is a common, very common indicator. It is available on all the charting platforms. Okay. Just a second. So it is available on all the charting platforms, and it is very common tool. So what is there in the Bollinger Band? We will see it on the charts also, but for the theoretical part, so there are 3 lines in the Bollinger Band indicator, which comprises of a simple moving average, which is also known as the middle band. So middle band is a simple moving average, and there's an upper band and the lower band. Okay. So upper band and the lower band is nothing but your 2 standard deviations. So your upper band and the lower band is 2 standard deviation from your simple moving average. Okay. So we have one simple moving average, say like this, and the upper band and the lower band. So this upper band and the lower band is nothing but my 2 standard deviation. 2 standard deviation. Okay. What we have seen here as this. So this 2 standard deviation is nothing but my band limit. Okay. A band limit. So that is exactly what is there in this Bollinger Band setup. This one indicator is more than enough to help you to analyze the market, where the market is going, whether the market is in trend, whether the market is in sideways, whether the market is ready for a breakout, whether the market is going to consolidate, whether the volatility is high, whether the volatility is low, where you should exit, where you should try to enter, where should be your stop loss. One indicator can help you answer all your queries. Okay. So approximately 95% of the price action occurs between these 2 bands. How do we got this 95% of the number? So we know that Bollinger Band has a middle line and a upper and lower line. Okay, and 95% of my price action occurs between these two bands. So how we got this 95%? Because it's a two standard deviation. Two standard deviation we have seen in the previous slide that it will cover my 95% of my data. Okay. So it is not just related to stock price, it is related to everything. You take any data, whether it's wheat prices, gold prices, your height of the class, or your color of the cars in the city. You take any data and you just put it on the statistical tool. 95% of your data will occur between the two standard deviation bands. Yes. So Bollinger Band, there are a lot of things in Bollinger Band. There's a concept named Bollinger Band squeeze, which happens when the band squeezes together, and means it is usually the prices are coming together. After that, a breakout is imminent. Okay. And when the market is quiet, the band contrasts, and when the market is loud, the band expands. Okay. Now let's try to understand this with the help of live examples, because enough of this statistical class, this will not help us a lot. So, I'm sure you all are familiar with the this candlesticks patterns. So candlesticks are nothing. This chart is of Nifty, okay, and it is a candlestick pattern. So candlestick pattern is nothing but your it captures 4 data points. When we see a line chart, the typical line chart, what we all are comfortable with, इसको हम line chart बोलते हैं. Okay. So this is line chart has only one parameter, and what is that parameter? It has only the closing price. So when we are talking about this line chart, which we all use in all our life everywhere, so it has only and only one parameter, which is it captures only the close price. Okay, but when we are studying market, the 3 more prices are more important. Where the price opened, what was the open price, what was the high of that market, what was the low of that market, and what was the close. So as a technical analysis, we just don't study this only a close price. Okay, we don't study only the close price. We study 4 parameters. So that is open, high, low, and close. Okay. So that's why to have these 4 data points, we use a candlestick pattern, which is known as candlestick pattern. Candlestick pattern helps me to analyze these all 4 parameters in one day trading session, or whatever the trading session I'm taking. In one trading session, it gives me the data points of all these 4 events. Let's just quickly turn it to a simple candlestick pattern. So here the candlestick chart is giving me all 4 open, high, low, and close. So in this, we use a simple study named Bollinger Band. So this is our Bollinger Band. What we have studied in the slides, the Bollinger Band have 3 lines. What are those 3 lines? This is my, usually it is a 20-day or 20 exponential or a simple moving average. It's a 20 moving average. Just say if you are using a 5-minute chart, it will use a 25-minute chart moving average. If you convert into a monthly, it will convert into a monthly moving average. So this line is nothing but my 20 moving average line. This line is nothing but a 2 standard deviation, 2 plus 2 standard deviation, and this line is nothing but my minus 2 standard deviation. Okay, so this chart, or this way, you can see where the market is going, how volatile the market is. So by way of just band, you can easily see, okay, where the market is doing. So just squeeze this. Okay. So we have discussed about 2 more things: Bollinger Band squeeze and Bollinger Band expansion. Okay. So whenever the market is quiet, can you see this band is squeezed here, or the length of this band? This is the height of this band is pretty low here. So this is known as Bollinger Band squeeze. Okay, and this is known as the expansion. can you see the height of this band here? It is pretty wide compared to this. Okay, and this is known as the expansion. When the market is loud, it is expanding here. Okay. Now, this is the middle line or the 20 DEMA line. This is your upper 2 standard deviation. This is the lower 2 standard deviation. Okay. How to make sense out of it? How to analyze that whether market is trending or it is not trending. Okay. So what we do is we add one more indicator into this. And what is that one more indicator? We just add one more Bollinger Band into this. Okay. So we go to this study and we add one more Bollinger Band. And what we do is we change the parameters of the second Bollinger Band. Instead of 2 standard deviation, we'll put 0.7. I'll give the markings. We will just change the color of this. Okay. So what we have done is we have taken the same Bollinger Band, but we have overlaid it twice. Once we are using 2 standard deviation, and in the second time we are using 0.7 standard deviation. Okay. Why this 0.7? How this 0.7 came? We'll discuss all that. 0.7 ka kya significance hai? Why not 1? Why not 0.5? Why not we are using 1 or 0.5 or 0.6? Ye 0.7 ka kya fascination hai mere ko? Why this 0.7 is being used? So we'll discuss that. But for that timing, just note down this, that we'll use 2 standard deviation, 0.7 standard deviation. Now we are getting a chart which is in 4 zones. Okay. And what are the zones? For the sake of simplicity, let's say this is a chart which is this is a zone 1. This is a zone 2. So what is zone 2? This area is zone 2. Okay. Say this area is your zone 3 and this area is zone 4. So what we have done is by using 2 Bollinger Band, we have made our same chart into 4 zones. Okay. It starts with this area as a zone 1, which we also call as a territory where all the the buyers or the bulls are there in the market. Okay. And this is the zone where the bears are there in the market. Okay. When a stock enters into a zone 4, it continues its falling trajectory and the bears are more in control. Okay. And stock prices will have more tendency to fall rather than to go up. This zone 3 and 4, zone 2 and 3, sorry. The zone 2 and 3 is also known as a no man's land. What do you mean by no man's land? It's the area where the market is indecisive. Where the market is indecisive, where it wants to go, it is like a common area between the bulls and the bears. Okay. This we can easily say as a city which is, can we say, we have discussed by way of temperature, can we say this city is a city which is the bulls or the hot city? In our previous example, this was a city which was a hot city. Okay. And this is the city which is cold, or a bear city or a cold city. Okay. So in a hot city, if I'm going and if I'm shorting the stock, if I'm going and shorting the stock, what will going to happen? Shorting means when a stock I don't have and I'm selling it. So anybody who don't have a stock and selling it, what will going to happen? Obviously, the market, once the market gives a breakout into zone 1, it has a higher trajectory. See how the breakout really happens. The breakout happens when the large institutions buy. When you and me buy the breakout, the stock doesn't goes to this zone. Okay. When you and me buy, the stock doesn't move here. It is usually when the large institutions or the large FIs buy, stock moves here. Okay. And when they're buying here, obviously they're buying for a longer period or longer trajectory. They're not buying for a shorter duration. So a stock moving into this zone or giving a breakout above or breakout on the zone 1, after that, there's a high probability. I'm using a word name probability. It is not confirmed that every time the stock moves into zone 1, it will going to go up. It is not the case. Okay, you have to use it, this zone study, with the help of other indicators, with the help of other data points like open interest, data point like your other indicators, your price action. You have to analyze with that. You have to use a study of RS, that is known as relative study, RS, relative study. But at least by way of this, you can easily understand what you have to do. A stock which is moving in this zone 4 is not a buying zone. Usually we have stocks, which are falling, continuously falling, we try to buy. So whenever you are seeing a stock which is moving into, let me just cover it by way of some examples. A stock like HL. So for bull market to happen, stock will have to move in a trajectory which is in zone 1. Okay. So a bull market is only when the stock moves into the zone 1 trajectory, and once the stock enters into zone 1, it stays there for a longer period. And the bull will always try to, this is the bull's home. We call it, this is not a, I'll say a theoretical definition. This is what we have. I run a prop desk, proprietary trading desk, where we trade our own capital in our own money. So we have traders in-house, and this, whatever we are discussing or whatever the terminology we are using, this is not a theoretical terminology. This is not from any book. This is what we have used in our day-to-day language. कौन से zone में है? You will not find this zone concept in any book. Okay, and you might find some of the languages or some of the words which is like very not so, I'll say, theoretically professional. Because a bull's house, what do you mean by bull's house? Bull's house is nothing but a zone 1 trajectory. So it helps us to quickly, जिसे हम बोलते हैं बोलचाल की भाषा में. That is the बोलचाल की भाषा में कि this is a stock which is moved into zone 1 or a bull's house. Here all you have to do is just find a good opportunity to enter the stock. Okay, a good opportunity to enter the stock. If you find, and how do you have to do that? So you have to always analyze. You have to always analyze in a top-down approach into the market. What is a top-down approach? Let me just open some Word file. So if you want to become a trader or investor, you always have to follow a top-down approach. What is a top-down approach? A top-down approach is nothing but when you analyze the entire, probably an economy as a whole, that how the economy is doing, what is the global economy scenario, how the India per se is going to do. Then you identify the sector. Okay. Then you identify the sector. Which sector will want to do good? Say, if the monsoons are good, that the agriculture related sectors will want to do good. Say, if we have a good monsoon, then all your tractor sales will do good. All your agriculture related stocks will do good. Agrochemical stocks will do good because the farmers will be using more agrochemicals. So those sectors will do good. And then we do the study of the stock. Okay. But what the retailers do, they usually just jump into this straight away stock. And how? They call up their friends, they call up some of the analysts, or they follow someone, or ye stock acha lag raha hai. That's the traditional way of the retailers do. They don't do this approach, top-down approach. They see ye stock, or whenever I do any public appearance, people don't ask me which sectors we want to do good. They straight away ask, kaun sa stock acha lag raha hai, kaun sa stock kal badhne wala hai. They are not bothered that which stock we want to do good for next 2 months or 5 months or 5 years. They just bothered that kal kaun sa stock badhega. Okay. So they, most of the retailers, see, I've worked on the institution side and I've worked with the retailer side also. So I know both sides of the desk and how they think and how they move. So the institutions usually use this approach and the retailers usually do this approach. They do a bottom down on, in fact, they just use a bottom approach. They don't even go till the upside also. Okay. Then in that stock, when we are talking about this, then, in the top down approach, then that stock, what we do is we study a larger time frame charts, say a larger time frame charts. When I say larger time frame, say if I want to hold a stock for a couple of months, okay, or a couple of days, then I'll be using a monthly chart. Then a mid time frame chart, I do an analysis to take I analyze that how the trend is on the larger time frame. I take a mid time frame, say a daily time frame chart to plan my entry in that stock, and my exit will be on a smaller time frame chart. Say what is the smaller time frame chart? Say a 4-hour chart would be good enough for my exits. Smaller time frame chart would be for my exit. So this will give me a overall trend in the market. How's the overall trend? Say if I'm using a larger time frame chart, it will be for the overall trend. Say what is the overall trend? If any stock which I want to buy, obviously the overall trend should be on the higher side. At least on the monthly chart, that stock should be in the zone 1. Okay. Then on the daily chart or the mid-time chart, I'll try to find the entry points. What is a good entry point where I can enter, where my risk to reward ratio is more favorable or it is more on my side. And then on the smaller time frame, I'll try to plan my exit. So that exit can be of both. Exit can be of 2 ways. Either my target is getting hit. How do I find my target, or my stop loss? So this is more on the perspective of, I'll say trading or a swing trade or a small time frame duration. Okay, trade. Even if you want to invest on the longer duration, you still should have the knowledge, or you should still analyze where the stock is doing, okay, and which zone it is trading, how long it will go, and how long it will remain in that zone, and what is the support and resistance where it might hit the resistance area. So how does the breakout happen? So breakout happens only and only, this breakout will happen only and only when your zone is or the chart or the band is, when the breakout happens. The breakout happens only after the band contrast or the band squeezes. Okay, so only after the band is getting contracted. Just a second. Yeah, sorry. So only when the band is getting squeezed, okay, only when the band is getting squeezed, after that only the breakout will not happen. Okay, so that is a very common, I'll say, indication of a start of a trend, that before the start of the trend, there will always going to be a band squeeze, and bigger the band squeeze, the bigger will be the trend, or bigger will be the run up. Okay. And what we have to do is we have to find these Bollinger Band squeeze in the charts, and we just have to wait for the breakout. Along with this, it is not just that the zone stock enters into the zone 1 and it is a breakout. Okay, so the breakout is, this is the first thing, and in this a limited time frame of 1 hour, 1.5 hours, or 2 hours, we cannot discuss the entire setup. But we have to understand this is the first thing. After that, you have to add open interest study, and study of other indicators, okay, and RS, relative strength, that which sector is doing good, how's the strength of that particular stock relative to the overall market. And then you can easily say that the higher say stock moving into zone 1, this gives you some confidence level. Okay, so your Z score will not keep on increasing the more and more parameters gets into your favor. So your open interest is also increasing. So your, again, Z score or the score increases. So indicators are showing a trend, reversal of the trend. Your relative strength is this. So the more ticks you're getting, ticks you're getting, so the bigger will be the breakout strength it will have. Let's just discuss some of the charts. So I was talking about the Bollinger Band squeeze. So if you can see, this is the stock. Again, these stocks, whatever we are discussing, is just for the education purpose. This is not a buy or sell recommendation. It is just for the educational purpose. We are discussing some charts here. I don't recommending a buy or sell or any of those things here. Okay. As you can see, this was a Ambuja cement chart, and you can clearly see that the stock was consolidating in a zone for almost 3 to 4 months. This consolidation started somewhere around May to last year, May, and it ended up somewhere in August. From May to August, the stock was consolidating or was trading in a tight zone of 380 to almost, you can say, 360. So 20 rupees ke range mein stock was trading. And can you see the squeeze, this Bollinger Band squeeze? And the bigger the squeeze it was, the bigger will be the burst. Okay. And after that, the stock bursted and went as high as, like, in one way it did a rally. See, as a technical analyst, we never question, the one of the most important question as a technical analyst is what? As a technical analyst, we never ask why. If you want to become a good technical analyst, stop asking this question, why? Why this stock is going up? You don't care why this stock is going up, why ITC is not going up, or why IT is going down. As a technical analyst, what is more important is what? Okay. What if we know if the stock is in zone 1, what we have to do? Or if stock is in zone 4, what do we have to do? We never ask why this stock is going up or why this stock is going down. We don't care. We think, as there's a common assumption in technical analysis that market knows everything, or the price is, everything is discounted in the price. So if say Infi ka kharab result aane wala hai, so that is discounted in the price and the street is aware about that. So say Infi. So you can clearly see what happened to Infosys. Yesterday there was a result. Yesterday, before market, there was a result. And what is happening into the Infosys? Can you see? From last almost 1 month, from March, mid of March, start of the March till today, stock like Infosys, which is a pure blue chip company, is continuously trading in which zone? Can anyone help me in that? Can anyone answer that? Which zone it is trading?
Sir, it's zone 4, I guess.
Yeah, it is on zone 4. Yeah, and it just did a little bit of pullback, but this was a Friday chart, and clearly you can see there was a lot of selling pressure. And after the market hours, Infi numbers came. Okay, and do you know what is the ADR, the American Depository Receipt, which is the stock which Infi is traded in US markets also. And after market hours, after 3:30, the numbers came. And you know what is the ADR trading at? This is for the Thursday. I think Friday was the holiday. So sorry for this. This is the Thursday. This is the Thursday. And you know what? How much was Infi in Friday in US markets? Can anyone guess? ADR कितना था? ADR कितना percent था US market में Friday को?
Sir, no idea.
Okay, it was down 8%. It is down 8%. So as a technical analyst, we never focus on what. We never focus on why. Why infy is not going up? We don't care why infy is not going up. As long as infy is in zone 4, as long as it is failing to enter into zone 1, there was a clear price action that there's this whole the slope of this Bollinger Band is downward. This entire channel is downward sloping. Okay, so it is clear that this infy couldn't break its channel on the upside. So there's a clear this. What we have to do is very important rather than why. We never focus on the why infy is not going up, or what why infy ke results अच्छे आने वाले, IT company should do good. But by seeing the charts, we can easily analyze. We can assume that the numbers will going to be on the bad side. Okay. And the American Depository Receipts, the ADR. Let me just open up the ADR chart. Give me a second. I'll just put the ADR. So these are the live examples we're talking. We're not talking about something on the past. This is what we want to help us or analyze it in the real market. So if you can just see, it is just just 5 days. So this was 12th April. So there was around 12th April, it was at 17.5, and yesterday it went as low as $15.5 on the ADR side. Okay, so there's a clear drop in the ADRs. Let me open some better chart. Just a second. Trading instruments. Can you see the infy ADR? This was 13th, and this is on the 14th. That is a Friday. So 13th was after market hours. It after we closed on Thursday 3:30, and this was the US market which opened after us. There was a clear after the numbers. There was a sharp reaction onto this, and it opened a gap down. And from this high of 17.5, infy has already fallen 50 till 15. So if there's a 8% drop in infy, we can easily assume that Monday ko market में क्या होगा infy का. And can we, by way of chart, can we analyze that Monday ko market में क्या होगा? Now, with a very simple 15-20, in less than 1 minute, you are able. Are you able to analyze, ma'am? In less than 1 minute, are you able to analyze कि infy का क्या strength है? Which zone is it is trading? Who's more active in infy, bulls or the bears?
Sir, it says bears.
Bears. From last 1 month, we can easily see there's a huge pressure. Her rise pe there's selling aa ja raha hai, and the price is getting hammered on the downside. The stock like Infosys, which is known as the poster boy of Indian equity market. Poster boy of Indian equity market means it is the best wealth creator. It has been the best wealth creator. But stock like this getting hammered because obviously the price. There's a saying in the market that or technical analysis. They say economics may be economics and technical analysis is very similar. Economics also we study the data, we study the behavior, we study the patterns. In economics also we study how the human psychology behaves. Like there's a study in economics that whenever people get rich, they buy more cars, isn't it? We have all studied economics in our CA foundations. But is it always that कि हर किसी के पास ऐसा आएगा तो he'll upgrade his car? Is it always the case? There's always some exceptions. In similarly, technical analysis also we study the chart with some assumptions and with some exceptions. So there's an assumption that whenever there will be a salary hike of a person, his expenses will not go up. That is the assumption. Okay, and there might be some exceptions. We always study that 95% of the data will do this. The 5% might be an outlier case. So in technical analysis also, we study the same way patterns or the stocks with the assumptions that price has the market has every knowledge, or the price is discounted everything. So somehow the street was expecting that there will be a bad numbers of the NFI, or they'll not be able to meet their guidance, or there might be some currency constant currency problems, or they can be higher iteration rate, or their order book will not be as strong, or the BFSI sector will not going to do good, or they might have some problems with executing those orders. Okay, some technology changes, whatever. But street was already aware, and the street already priced in the bad results. That's why the stock was continuously on a fall from last 1.5 months. From March onwards, the stock was continuously on a fall from almost 1600 level. 1600 से stock slip होकर it came till 1400, and picture अभी बाकी है. Monday we'll see more pain on stock. Considering the ADR जो कि 7-8% down दिखा रहा है, I'm hopeful that it might fall. It can easily fall 2 to 3% in Indian markets also. Okay. Yes. Charts. Z Entertainment Limited. By way of seeing this chart, let's say when you zoom out a chart, say zoom out for a weekly chart, you can easily see what is the stock, where is the strength in the chart. Is there any strength in the stock? Stock is continuously trading in its zone 4 on a weekly pattern. Is continuously trading in which zone? It is trading in zone 4. Does it, it is continuously on a falling this, and it is continuously, see, if it's a bear market, or the bear will not be in control, they'll always try to hit the lower Bollinger Band. Okay. Most of you have studied Bollinger Band. Many of the books में बहुत सारे जनों ने Bollinger Band पढ़ा होगा या Bollinger Band के बारे में पढ़ा होगा. That is the common mistake. What people do is, many books you'll find, just give me a second. In many books you'll find saying that this upper band is what? It is, in many books the definition is written as upper band is a zone where it is over bought or oversold. Can anyone guess on the chat box? Books में क्या लिखा रहता है? Yeah, NFI is, most of you have guessed it right. Prashant ji, Madhav ji, that is down 15 to 10%. Yeah, 10%, 9% now. Okay. It is overbought or oversold. In many of the books, you'll find that it is written as it is overbought. And this band, or the lower band, is known as the lower band, is known as that it is oversold. Okay. When we say oversold, मतलब क्या हो गया कि बहुत ज़्यादा बिक गया है. अब यहाँ से bounce आएगा, isn't it? When we hear oversold, it means that it is over. मतलब it is बहुत ज़्यादा sell हो चुका है, and there's a high probability that it will bounce from here. That is a wrong statement. In many of the even books, it is written that. In many of the YouTube videos, people who are just the YouTuber who don't trade market, they might say something like that. Say, if I'm a doctor, my view would be very different. And if I'm just a YouTuber who's giving some health tips, my perspective towards the health would be very different. Okay. So most of these YouTubers are nothing but just the YouTubers. They don't even trade into the markets. They're just so they use this word like oversold. Okay. This is the zone which is not oversold. This is the zone where the bears are more active, and somebody who's pushing the price down is not pushing the price down for just here. It is a high probability that stock will want to slide further from this point. Okay. So the common mistake what people do is they think this is oversold and they buy here. That Bollinger Band ke lower band pe mil raha, it is a fair deal, or it is it is a bargain deal. Let's buy it here. It is not a bargain deal. Okay. Obviously, if you're getting you have to add it with the price action. If you're getting a price action like this, it might going to be a good, because it is forming a hammer pattern. Okay. So even if you want to buy in the lower zone, you have to buy it with the help of price action. You have to wait for the reversal sign. You cannot buy on this candle. Let me just erase. Yeah. You cannot buy on this candle or this candle. You have to wait for this candle to form. Why this candle was important, or what is the significance of this candle? The significance of this candle is known as a hammer candle in technical analysis, or inverse hammer, or inverse hammer, or this. आपको हथौड़ी का एक shape दिख रहा होगा. Okay. What happened? The price opened here in this weekly chart, what we are discussing. So price opened in this zone. Let me just quote the price. So what was the thing price? Open was 195, close. Open is your 195, close is your 200, high is your 202, and low is your 176. So what happened to this candle, this particular candle, and what is the significance of this candle? So open of this candle was 195. So this candle opened at 195. High कितना था इस candle का? It was 202. Close was 200 पे, and the low was 176. So what happened? This is very important point. The low was 176, and the close is near to the high. You can clearly see the close is near to the high. The high is 202 and the close is 200. So the close is very much near to the high, and lower level pay, I mean in this level 176, 180, and 180, 170, 180 ke range mein, there was a buying. So the sellers got exhausted, and the more buyers came into the picture. The selling was absorbed, and the buyers pushed the price higher. So even if you have to buy in this zone, you have to wait for the price action to confirm. Okay, this is not the price action where you will buy. You'll buy after this. Okay, even if you want to buy in zone 4, you will not buy anywhere here. You'll buy at least on a candle like this is formed. After that, you'll have to do a study of open interest. Again, I'm coming back, repeating myself. It is not just that you have to buy here, or or breakout, every breakout pay you have to buy. You have to add this study with open interest, with price action, with your other derivative data, and your relative strength study. So you have to add this study with all these 4 or 5 parameters. Then you have to take your decision whether you want to buy or sell. But by way of clearly seeing the chart, you can say this is clearly in zone 4. In zone 4, and the stock is in huge pressure. Stock is in huge pressure. Again, it trying to break out in zone 3, but looks like from the seeing of this looks like it is still under the pressure, and it might fail. Again, I'm saying there's a high probability it might fail to give a breakout. For us, at least the buying will start. At least wait for the stock to come into the zone 2. Okay, zone 2 में कम से कम आप आने जितना wait करो stock को, then only think of entering into that stock. Okay. Or at least wait for the squeeze to happen. that Bollinger Band squeeze to happen, something like this. This was a clear squeeze here, and then there was a break. There was a breakdown. Okay, and then this breakdown, which the breakdown doesn't happen here, not in this particular candle. The breakdown got a confirmation on this candle. Okay, it's a weekly chart. You got a confirmation of the breakdown on this particular candle, and even if you after this candle, somebody started shorting or somebody started exiting, still there was enough room. Still from 250 stock went as low as 176. So there was enough space. So most of the people think this is the end of the this is like the already price bahut gir gaya hai. Many people think it like that way. But if it's a bear market, see, in a bull market, no price is too high, and a bear market, and no price is too low. We have seen crude going negative. So a commodity like crude, we all, as an Indian, we all know how precious petrol is. अगर हम सिग्नल पे भी खड़े रहते हैं 2 मिनट के लिए, तो we switch off our cars. So we all know how precious petrol is, and petrol going negative is like a distant dream. We cannot even imagine in our dreams that a commodity like crude going negative. As an Indian, we have two commodities we know is always precious for us. One is gold and one is petrol, and we always have an assumption कि ये दोनों के prices कभी नीचे नहीं आएंगे. Petrol prices will always going to go up. That's why whenever we are buying a car, we always are very conservative. Ki mileage, kitna deti hai. We don't talk, what is the, we always ready to trade off between the comfort and the mileage. We always want a car which have a better mileage than the better comfort. So for us, if a commodity, if a commodity like crude can go negative, so any stock can go to zero. So there's no this कि ये stock नहीं गिर सकता. Yes Bank 15 रुपए भी expensive है. Okay, it's not that कि 15 रुपए is cheap. So say a stock like Yes Bank. Classic example. How if you just convert into a monthly chart, you can easily see there's no strength once it started falling. Or any stock you'll see which has become a penny stock, or there was a huge selling in that stock, DHFL, it never was able to even break into the zone 2 or zone 3 also. You can clearly see once it started falling, the pressure was so immense कि यहाँ से जब breakdown हुआ, the pressure was so immense कि the sellers or the bears was not even or the bulls was not even able to take it to zone 2 or zone 3. Zone 2 or zone 1, उसमें भी कभी breakout नहीं आया. It was it was so much in the grip of the bears that it was a continuously zone 4 trade. It was continuously trading in zone 4. And if you just move into the daily chart also, let me just convert to the daily chart. In daily chart also, you see every time stock goes up, but again it slips back to the this was somewhere around before the lock-in period was expiring. This particular period where before the SBI lock-in was expiring. But see what happened after the SBI lock-in. SBI lock-in, the shares was locked in and was not ready for available for sale. But now we can see a squeeze happening clearly in Yes Bank. The band is getting contracted, and there's a clear squeeze happening in Yes Bank. So what we can expect, some breakout in either up or the downside. Okay. But it is not a portfolio level quality stock, so we'll not discuss this. So we'll jump to some good quality stock. Yeah, stock like SRF, which is continuously now trading in zone 1. And every time the market corrects, there's it gets a new buying pressure from that side. Okay. Yeah, bullish hammer. Ma'am, can we open the floor for the Q&A session, because more or less I'm done with this technical parts. So you can have more Q&As to discuss it on this. Make the queries, clear the queries.
So question would be posted on that portal only. They would not be reflected in here in Zoom.
Yeah. So participants, there's no questions here so far. Anyone having any questions here? So far, whatever we discussed, the Bollinger Band. Okay, coming back to the point 7, why this which question which I asked. Why point 7? What is the significance of point 7? How we derive point 7? This whatever we discussed, 2 standard deviation points, 2 Bollinger Band setup. You will not find it any books. Okay. You will not find it anywhere in traditional technical analysis books. So what is the significance of 0.7 is, my one standard deviation covers 68.27% of the data. So we wanted to have 50% of the data coverage. So 50% of my data, so 68.7 is like one standard deviation. So 50% of the data is nothing but your 0.7 standard deviation, 0.7 plus and 0.7 minus. So if I want my 50% of my data set to be covered, or my price action of my chart to be covered, it will cover in your 0.7. It is actually 0.68 something, but for the sake of simplicity, if you round it off, it will come to 0.7 standard deviation. Okay, 0.7 will cover my 50% of my data, and my 95% of my data will covered in my 2 standard deviation. So 2 standard deviation will cover my 95% data. That's why we use 2 bands, 0.7 and 2 standard deviation. These 2 parameters we use. So this covers my 50% of my data set, and this covers my 95% of my data set. So these 2 bands is good enough to give me a clear picture. Just by seeing the chart, I can easily say in less than 30 seconds, probably in less than 20-30 seconds, I can easily analyze that where the stock is. Any stock which is in zone 4, zone 1 is obviously in control of bulls. Any stock which is in zone 4 is obviously in control of bears. So stock like say just cover it. Or any stock is like continuously falling. So stock like most of the IT stocks are on selling this. You can clearly see the stock is clearly in. It is even failing to move into zone 1. There's no strength, and every time the stock moves up, the selling comes from there. Yeah. So there was a question why 0.7, which I've this. Anything beyond Bollinger Band breakout? Okay. Why 0.7 is there? Which is the suitable indicators to combine? Suitable indicators is one amazing indicator is ADX. So you can combine ADX with this Bollinger Band. Then other indicators, see, indicators are like indicators. Indicators is, it tells you, to give a context of indicators, it is like, driving on the Pune road, where people will give left indicator and they'll turn right. So most of the time indicators fail. Okay. So is the price action which is more precise in market rather than indicators. Okay. So but some of the common indicators which you can use is which works beautifully is ADX. Then obviously your RSI works amazing, and the third common indicator is MACD. So these three indicators works beautifully. They help you to analyze the strength, momentum in the market. ADX is more better because it gives you not just the momentum, it also tells you the trend ka strength kitna hai. How much is the strength of the trend? Okay. Anything? Can you give us idea of open interest? Open interest is a concept which probably can take like we can discuss open interest in at least 2 days at length. There's such a beautiful and a big concept, specifically when we talk about open interest of futures as well as options. So option chain open interest, option your PCR data and those concepts can easily spread for that long. I'll try to cover open interest in short, but yeah. So there are many companies which have low PE between 5 to 10 and low book value of this. Why not performed, or they are undervalued stock? One example is Star Paper. Utsavji, as a technical analyst, we never, that is the whole question. The question is, there are many stocks which are undervalued, say, which are available at lower PE, 5, 10 ka PE pe available hai, and which has a book value of 0.5 or 1. So you're getting a stock which is like at a fair valuation. Why they're not performing? So again, coming back, as a technical analyst, we never focus on why. We never focus on why, we focus on what. Okay. We never focus why in fees not going up. It is such a poster child. Why IT stocks, they have always been a multi-bagger. They've created huge fortune or the wealth for investors in their market. But why they are not performing? Why FIs are not buying in Infosys? There's such a safe stock. We never focus on why. Why they are buying government companies? Why stocks like BAIL or PSU companies are going up. As a technical analyst, we never focus on why. We only focus on what. So if this is happening, what we have to do? If a stock is in momentum, if a stock like say HAL is in zone 1, I know if on my weekly chart HAL is on zone 1, I know all I have to do is find on the daily chart any buying opportunity. Daily chart पे से मेरे को उसमें buying opportunity ढूंढनी है. So I'll not focus why it is going up. So that is not my this. Okay. So do you suggest averaging in quality stock? If yes, how much percentage correction as compared to initial buying price? That's a good question. I don't suggest averaging in any stocks. Okay. But I suggest buying a stock in a SIP mode. SIP is a beautiful concept which has been got very popular on the mutual fund side. But I think if we do the SIP of stocks, we might outperform most of the mutual funds. Many of the mutual funds don't able to beat the index. Okay. And if you cannot good with stock picking, at least you can straight away buy the index. So stock like you can straight away buy Nifty. So there's a beautiful ETF across the globe actually. ETFs are more popular in US, which is the biggest market, equity market. ETFs are more popular. So this is the Nifty ETF. So you can buy straight away Nifty, or when you're buying Nifty, you're buying India actually. So you can straight away buy Nifty into your portfolio. And this is like a derivative. This is not a derivative. कि आपको monthly expiry है Nifty में, जैसे आपका futures में monthly expiry है. This is like your normal portfolio. You can buy it. It will come to your demat, and you can hold it for perpetual. You can give it generation to generation. It can pass on. So if you'll see the Nifty in the long run, it will always gonna outperform. It will always gonna beat your any debt instrument. I'll say it will though it is consolidating from last 1.5 year. But in the long run, you're always going to beat all the bank FDs or the typical debt instrument papers, because it's it always going to outperform the inflation, because Nifty is what? Nifty is the top 50 businesses in India, and top 50 businesses will always going to outperform the inflation. They'll always going to be give a higher return than the inflation. So Nifty will always going to be on the higher side. Okay. Similarly, you can buy Bank Nifty Bs, Bank Bs. So this is a banking index. So say you are very confident that India banking sector will want to do good, because if India have to become a 5 trillion economy, more digital economy it has to become, the more banks will want to be the beneficiary. So instead of taking a risk in one particular bank, say कि कल हमारे portfolio में कोई ICICI कोई Yes Bank बन जाए, इससे we can straight away bet on the banking sector as a whole. And when we are buying this Bank Bs, which is the ETF, what we are doing is Bank Bs have a weightage of approximately weightage. So it is like say trading at 400 rupees, 425 rupees approximately. So your 30% will go to the HDFC. Approximately, I'm saying, you can see the exact combination in NSE website. Say your approximately now it is 25%. It is actually more than 25%. This is around 28%. It will go to the ICICI Bank. Say 10% will go to the Axis. 10% will go to your Kotak, and 10% will go to the SBI. Okay. So 30 and 30, 60 and 25. So 85% of your money is going to the top banks. So approximately 80% of your money, 85% of your money is going to the top banking sectors. Okay. And we all know if India will going to become a 5 trillion economy for sure. Okay. With 1/7 of the world population, and per capita GDP so less, per capita GDP, we might become the fourth, we might be the fifth or the fourth largest economy, but our per capita GDP is as good as you can compare it with Bangladesh. So it is still $2,000 approximately. So there's a long way for us to grow. So we will be growing, and we will be growing at bigger than the world rate. So your 80% of your banks will have to do good, and these are the frontline banks. So your portfolio, when you're buying 425 rupees, 80% is going to the top banks, and they will going to outperform in the banking. So you can buy this, and you can easily time the market. When you're buying ETF, obviously you can buy in zone 4 also. That's a bargain deal. Or when you're buying any ETF, you can obviously buy when stock is in zone 4, or you can buy it low. That works beautifully. But yeah, stock specific, don't buy something in zone 4. So yeah, coming back to averaging stocks. So I suggest do averaging in ETF, but not in the stocks. Can you explain more on some show backtesting of zone 4 as support zone with the price action? Backtesting with the zone 4, see, you cannot do the backtesting of the zone 4. It's more of a discretionary trade. It's not a order trade. And I'm not saying zone 4 as the support zone. I'm saying zone 4 is a zone where the sellers are more active than the buyers, or the market is more in control of. See, I'm not saying zone 4 is your buying zone. I'm saying zone 4 is a zone where your sellers are more active than your buyers. And zone 1 is a space. Zone 1 is a space where your buyers are more active, or the market is more in control of bulls. Zone 1 mein, and zone 4 mein, market is more control of the bears. So, when we are, say, if you're going somebody's house, will you go and abuse them? Obviously, no. See, if I'm going somebody's house, will I go and abuse them? If I'm going to a house of, say, so if I'm not going to abuse them, so why I have to go and short the market here, or why I have to go long here? Okay. So I'll try to be. So when you are in Rome, do what Romans do. That's a common saying. So if I'm going into Rome, and if I'm going to the bear zone, I'll try to be more bear than I'll try to be more bull. Okay. And that's where I'll get more opportunities. the risk reward will be more favorable. So obviously you have to analyze the trend in the longer time frame, and then on the mid time frame you have to take your decision, entry and exit decision. Yeah. Bollinger Band is more relevant in trading. Obviously, it is more relevant in trading, but it is absolutely relevant in investing also, because in investing you get, by seeing the Bollinger Band, you can easily see how the stock is behaving. Where is, how the investors, where is the support zone? Where would be a good entry point? Where would be a good place to exit or the book profit also? So as we started our discussion that we cannot, in investment also we cannot just buy and hold. Gone those days कि जब आप खरीद के बैठ गए और वो मल्टी बैगर बन गया. आपको उस मल्टी बैगर को भी you have to see. It's not like you just put up a one seed and अपने आप वो पेड़ बन जाएगा. You have to nourish or nurture that stock. You have to keep on seeing that stock. You have to keep on analyzing that stock, and you have to periodically book some profit. You have to periodically book some profit and exit and then re-enter. That is because you'll see market will be volatile. We cannot complain about that. Market has changed. The structure has changed of the market. Okay, we cannot expect the market to be calm now. Market will always going to be volatile. Now since we have understood market will be volatile, how to use that volatility in our favor. So the volatility will be used in our favor is whenever there's a dip, buy in good ETF stocks. ETF, but whenever, if you're talking about the stocks, if there's a breakout, then enter, okay, and if there's a breakdown, then exit. Or you find more shorting opportunities when there's a breakdown. Other than BB, if any, other than BB, see, there are a lot of ways you can identify the breakouts. But I don't want to confuse you guys with a lot of many things. The breakouts can be by way of patterns, by way of indicators, by way of consolidation. But the common pattern, the common thing will be in any breakout will be the consolidation. Okay, and the consolidation what do I say? To understand the consolidation, Bollinger Band is the best indicator. Okay. Again, ADX is again a very good indicator. As I said, you can use Bollinger Band along with the ADX. So breakout होने से पहले consolidation होना ही है market में. The bigger the consolidation, the bigger will be the breakout. Yeah. So Bollinger Band is probably the best indicator. One indicator, and it tells you a lot many stories. It tells you all the stories that whether the market is volatile. If the Bollinger Band is expanding, the volatility will be expanding. If this moving average is upward sloping, obviously the trend is upward. If the stock is continuously in zone 4, zone 1, it is completely in bull territory, or the buying interest is much higher in the stock. If the stock is in zone 4, stock is obviously in control of the bears. Okay, so one indicator tells you everything. Who's in control. Stock which is what I'll say stuck between zone 2 and zone 3 is a clear indication that it is stuck. Neither the bulls or none of the bears are active in the stock. So it tells you a lot of things. It tells you in simplest glimpse of the market. एक indicator में आपको पूरा market का glimpse मिल जाता है. And then obviously you have to add it with the price action. Price action is a beautiful study. It tells you a lot many things about the market, or the market behavior. So as an economist, we are studying the behavior of the market. So it's more by way of price action. We are studying the behavior of the market participants. So in charts, we try to study how the market participants are behaving and what will be their next move. Hope Bollinger Band can also be applied to Bank Nifty. Absolutely. If you're trading Bank Nifty or if you're trading options, you should have the knowledge of Bollinger Band. It works beautifully. It works beautifully in the smaller time frame also. Say 15-minute chart will also have. Just let me convert to the 15-minute. So in 15-minute chart also, your Bollinger Band study works beautifully. Let's see. As you can see, this is of the Thursday. In the last 15 minutes or last 2-3 hours, market was clearly on the uptrend, and market was clearly on the upper band. Was continuously Bank Nifty was hitting the upper band, okay. And this was the zone where this was a Thursday expiry, and this was the zone where Bank Nifty options of say 42,000 went 42,000 call went from I'll say probably 5 rupees to 200 rupees. 42,000 ke calls went from 5 rupees to 2,000 rupees, or 10 rupees to 2,000 rupees. Let me just open that chart for you guys. It works beautifully on Bollinger Band works beautifully on options also. So this is the call 42 to 2,000. Let's see the 42,000 per call. Yeah, 42,000 call. Sorry, it went from 40 to 200 went from 5 rupees to 2,000. 40 to 200. 42 2000 or 42,000 तो और ऊपर गया था. So you can see this. It was trading approximately at 2000. Sorry, do the historical. 42,000 के call. 42,000 call, which is for the expiry, which happened on 13th April expiry. The date is the 13th April. So a short. Yeah. So this is 42,000 call, which is of this. So it went from 2 rupees to 150 rupees, not 200. It went from 2 rupees, almost 5 rupees का low था, और वहां से it went as high as 150 rupees. So around let's say 12 o'clock or 12:30 के करीब, it was trading close to 5 rupees and made a high of almost of 150 rupees. By 3:30, 3 बजे के करीब है, 3:30 बजे के करीब है, 150 रुपए का हाई बनाया था from 5 to 150. So obviously you can see in the bank Nifty chart also, Bank Nifty was continuously in zone 1, and when stock is in zone 1, it was in control of the bulls, and because of that, 5 rupees chart, 5 rupees ka option went to not 200, went to as high as 150 rupees. Yeah. We'll take more questions. What is the significance of daily volumes? Volumes is very important, but you have to use volumes with the help of along with the open interest. So volume per se is very important, but if you combine it, volumes with the help of Bollinger with the open interest and delivery volumes. So those two things are very important. So volume on a standalone basis will not give you much detail, but volume plus delivery volume of the stock, how it is moving, and plus with the open interest, it will give you more better picture. See, open interest, I'm not covering right now open interest right now, because open interest is the study which you have to study with the future plus options open interest. Okay. ये दोनों open interest जब तक आप नहीं समझोगे तब तक it will be incomplete to understand the open interest. You just don't have to see the future का open interest. You have to see the options. Sorry, option open interest also. You have to see open interest of both future and options. Okay, then you'll be able to have a clear picture of this. So it is like a jigsaw puzzle. You know, market is like a jigsaw puzzle. More better, the more things you will put, the better picture you will get. जितने आपके puzzles के pieces आप add करते जाओगे, right pieces, you cannot add the wrong pieces. So Bollinger Band is one of those pieces which will help you to have a clear picture. You have to add open interest, price action, and some indicators to have a clear and total picture of the market. Any other questions? Can we use this setup in option price charts? You can use this setup in option price charts, but option price charts are very volatile. So they usually move very fast in between zone 1 and zone 4. Okay. So it will be better if you use in the spots rather than the option price charts. In the spot, the spot is more, what I'll say, is less volatile compared to options. So it will give you a price action will give you better understanding of the market. You can use it, but the efficiency will not be that good in the option charts. So if you want to trade options, see, options is nothing but a derivative. So it all prices comes from the baseline underlying product. The baseline underlying product is the spot. So if it's a Reliance or Bank Nifty or Nifty, so the spot is more important than the option. Will you show how to identify breakout using open interest? Open interest is, as I said, you have to understand open interest in both the perspective as well as future as well as options. So again, open interest, just give me a glimpse of it. Okay, open interest have 4 parts. When we talk about open interest have 4 parts. Generally, long built up and a short built up. ये बहुत easy और easy concept है, short built up, the long built up and short built up. Then there is a long unwinding and there is a short covering. Okay, short covering. Now, if you'll see the theoretical definition, these 2 are very easy. If you just Google, you'll be able to understand. Long built up. Long built up may, let me just, this is what we're talking about with futures. This is not of the options. Let me open some PPT for you guys. That will help you to understand much better. So whenever your price is up, so this is the open interest. Whenever your price is going up and your open interest is going up, then we say there's a strong uptrend, and this is also known as your long built up. Okay, this is very simple. Whenever your price is going down and your open interest is going up, okay, then there is a strong downtrend. Okay, then that is known as a short built up. Market is a short build up. Okay. Typically, all the long build ups will gonna happen in zone 1 or probably in zone 2. Okay. Short build up will happen in zone 3 or zone 4. Okay. The trick happens in these 2. Your price is going up and your OI is going down, and your price is going down and your OI is also going down. Okay. So can anyone help me this? ये कौन से zone में होगा? market price is going up and your open interest is going down. I do understand histogram and what is the second. How's the second band added? How's the second band added? You just have to use the I have added in the zero. The re-show you. So you have to go here, studies, and just add a second Bollinger Band. That's it. You have to go and change. So I've added actually 3 right now. You have to go and change the parameter to 0.7 standard deviation. In trading view also it is similar. In trading view, you just go and add the indicators. Indicators may you just go and change the setting. So here you go and change the setting to your 0.7 standard deviation. Yeah. Coming back to this open interest study. See, open interest is a very vast concept and it will take us 2 days to understand this. But just to give you a glimpse of the open interest, can anyone guess where this scenario will going to happen? Where the price is going up and the open interest is coming down. Which zone it will happen? Yeah, so I got one answer between zone 2 to zone 3. That is by Prateek. Any other answer? This particular scenario. Where the price is going up and the open interest is coming down. Okay, I'll tell you. So this can happen in both zone 1 and zone 4 also. Zone 4 also. Okay, this can happen in both zone 1 and zone 4. When it happens in zone 1, okay, that price abhi bhi up ja raha hai, but open interest is coming down. So what is happening is institutions are exiting that stock. Okay, and probably retailers are moving in. So because retailers are moving in, still the prices is going up, but the institution activity is not there. So the open interest is going down. So that's why the institution activity is not there. So uptrend is weakening. This is the best time to exit the longs. It can happen also in the zone 4, where the price is going up. So that is known as the short covering, basically. When the price is going up and the open interest is going down. So open interest is going down means there's a short covering happening. So that's why, because the open interest niche gir raha and price is going up. Okay. So in zone 4 also it can happen. So you have to understand open interest with reference to the zone. Okay. And with reference to the zone, you have to understand, with the help of RS study also. RS study is a relative strength study where you study not just the stock, you study the sector also. You study the sector, and with the reference to the sector, how the stock is doing, with reference to the Nifty, how the sector is performing. So you have to analyze in both the ways. Yeah. So the question is, considering the likely scenario, recessionary scenario in US and Europe, how do you see the impact in Indian market in short term and long term? In the short term, I see the market to be very volatile and market to be in sideways. We don't see, I don't assume that market will be hitting new high very soon, considering the recession, considering the, if there's a recession, the corporate earnings will not get decreased. The corporate earnings will not get decreased. मतलब आपका earnings कम हो जाएगा, so P ratio अपने आप बढ़ जाएगा. So market will not give a higher P ratio to the market. So obviously, to make the P वापस readjust the P, the prices will have to come down, because the earning is coming down, the prices will come down. So there will be a lot of sector rotation. See, we are seeing Nifty still at 18,000, close to 17,500 and 18,000 ke beech mein. But there are a lot of sector rotation has happened. IT as a whole has underperformed. Defense and infrastructure companies are outperforming. Stocks like HAL, BEL, L&T are hitting 52-week high, and whereas stocks like TCS, Infi are hitting almost close to 52-week low. So there will be a lot of sector rotation. तो हमको ऐसा लगेगा कि निफ्टी तो वहीं खड़ा है, लेकिन हमारा portfolio down है, because maybe our portfolio is not well balanced. Our portfolio have some skewness towards some particular sector, or our portfolio might be outperforming the market also. So depending on the portfolio, but typical portfolio will have more of the IT, more of these stocks which are underperforming right now compared to some of the stocks like railway stocks or defense stocks. That is not like a portfolio favorite stocks. So we might see in the short term market to be very volatile and very sideways. But yeah, in the long run, obviously market is going to do good. It is right time to invest slowly in the market by way of SIP. Yeah. I want to understand the significance of histogram in MACD. What time interval do you prefer for intraday trading? And you use chart IQ or trading view as chart option? Okay, that's a lot of questions. But I use you use chart IQ or trading view, both are almost similar. So I use AMI broker and some of the algo platforms. We have our own algo platforms to analyze the trends and charts. So I use that. Coming back, which time frame I prefer for intraday? Intraday I prefer 15 minutes and above. Less than 15 minutes I don't prefer the time frame. 15 minutes is good enough time frame. उससे नीचे बहुत ज़्यादा volatile हो जाता है and there's too much of noise. So to reduce the noise, I prefer at least 15 minutes, even if I'm trading intraday. What is the significance of histogram in MACD? There's no such significance. It is just a way of representing. So you're the slow line and the fast line of MACD. Just open up the MACD. So MACD का fast line and slow line को ही आप represent कर रहे हो histogram में. So MACD is the indicator moving average, convergence and divergence. Okay, so 30 में आप जाते हुए CD plot कर रहे हो. So there's a fast line and a slow line in a MACD. तो वो जो difference है दोनों का, that is the histogram basically. So histogram is a more of a graphical representation, which is more easy to understand compared to these fast line, slow lines. So जब आपका black line will be above, the fast line will be above the slow line, MACD will be positive, and this black line will be below the red line, MACD will be, the histogram will be negative. And जब ये gap कम होता रहेगा, तब ये red हो जाएगा, जब ये gap बढ़ेगा, तो ये green हो जाएगा. So that is the histogram. Histograms helps you to visibility ज़्यादा easy हो जाती है. Any other questions? Any other questions?
There are no other questions.
So we may conclude the session now.
Okay, sir. Animesh sir. Animesh sir, are you there? I believe Nanda sir is not joining. So, let us proceed to conclude the session. So thank you, Ashish sir, for comprehensively explaining the concepts and taking the session chronologically. You started with the history of breakouts and you told us about Silicon Valley Bank, 108 years of old banks, Lehman Brothers, Tata AIG. And surprisingly, I came to know about many different terms like Stockholm Syndrome, the zone concept. I'll remember them forever. Means these are really very precious takeaways for me. And the top-down approach and like the Bollinger Band squeeze. So I remember, sir, when I was in CA final, I read all of them, all of these terms, but theoretically. But now I got a better understanding of these concepts. So thank you, sir. And I believe our audience would be definitely be benefited by your comprehensive session. And so thank you so much, sir. And it was a pleasure sharing stage with you. Thank you so much, sir.